How to buy your first rental property with no money. Commercial property sales are booming. According to current estimates, investors will invest about $200 billion into U.S. commercial property just this year, and the number increases annually. Most analysts expect an increased boost in the near future short term as investors reallocate their capital from the increasingly squishy stock market to the stable real estate market. This is a very smart move, especially when you're working to create a stable center for your investments. Commercial real estate has been historically very stable indeed, with an annual rate of return ranging from 6 to 9%. Foreign investors are not the only ones picking up commercial properties. Businesses besides the big boxes of Walmart and Kroger are starting to consider purchasing more than just the space they need. Instead, they're looking at the control and profit potential of owning strip malls that their stores anchor, or of following the strategy of many duplex owners and renting out space in buildings they are not using. This trend only pushes the value of commercial property higher. You'll also need to think about the ways these other countries do business, and don't be afraid of stereotypes if they are accurate. German companies, for instance, are very conservative and purchase primarily commercial properties that are very stable with minimal tenant rollover and with long-term leases that tenants have been in for a while. British investors and investors in some other countries are interested in the U.S. market partly because the weak dollar versus their currency has dropped the price of American real estate. This goes for domestic investors as well. Each investor is a little different, and they're coming from a different place financially and in their needs. You may be able to see better than they the advantages of purchasing a given commercial property, and if you can just educate them on the advantages that will accrue specifically to them, you will close the sale. Another great source of potential investors in your commercial property is funds, not the traditional REITs but rather pension funds, corporations, and real estate partnerships, among others. While REITs have been soft lately, other funds with more diversified holdings are booming. Marketing your properties to these others can make an enormous difference in what you're able to sell and what price points you can look for. Look also for unique opportunities using the one man's junk as another man's treasure principle. In one case, an enterprising real estate investor found a company that did environmental cleanups for other companies. He convinced them that serious money could be made in purchasing sites labeled environmentally hazardous at bankruptcy prices, cleaning them up and then reselling them. This model proved very lucrative indeed. Sensitivity where the buyer is emotionally can also net a serious profit. Some clients are ready for a challenge or a risk, others really are not. Sell to this very personal preference and you'll find clients where you thought none existed. There are as many types of investors you can attract as there are types of investment properties. Focus on flexibility and creativity and you'll prosper.